Dr. Babasaheb Ambedkar Open University.
Welcome, my dear friends and students, to Dr. Babasaheb Ambedkar Open University, Ahmedabad, in Chaitanya Studio, Dr. Babasaheb Ambedkar Open University. In the video lecture series of Direct Tax and Indirect Tax, Unit 1, Income Tax Act 1961. Now, my dear friends, in this lecture, we define that what are the types of taxes. There are mainly two types of taxes in India, that is direct tax and indirect taxes. In a modern time, in a different classifications are available also. So tax may be grouped as tax on the income, tax on commodities, and tax on a capital. So basically, my dear friends, these are the structure of that types of tax. That is, tax is in the two types. First is direct tax, that is tax on a person or organization, and tax and indirect tax, that is a tax on a commodity also. In direct tax, that is only and only that is a income tax. But before that, the wealth tax and gift tax was there in direct taxes, but now there is an only income taxes. Then in the indirect taxes, there is an goods and services tax called GST and custom duty over there. After the goods and services tax came into force in 2017, 1st July 2017, the various indirect taxes are abolished and converted into this one tax, that is a one nation, one tax called an GST, that is a goods and services tax. Now, the direct taxes. The direct taxes, those taxes which are levied immediately on income and property generated by the individual person or a group of person. That is only levied by to a particular person. The income of a person or the group of person is directly assessed and tax payable is determined. My dear friends, this tax is directly paid by the individual to the government treasury, thus that directly contributing to the national exchequer. By this simple logic, tax on income, tax on wealth, and tax on gifts are direct taxes, since these are collected from person who earn income or hold property or donate money by way of the gift. The direct taxes are normally levied on the individual who are assessed or determined on the basis of their income or property. My dear friends, direct tax is tax paid by a person on whom is imposed, and the burden of this tax cannot be shifted by the taxpayer to any other person. But in indirect tax, the burden of tax can be shifted to the another person. Jay's bill has defined a direct tax as one which is determined from the varied person who is intended or desire should pay it. In other words, we can say that where the amount of tax is paid out of the pocket of the person who is legally responsible for the payment of the tax is termed as direct tax. So my dear friends, these are the definitions of that direct tax. Now we move forward to the advantages and disadvantages of the direct tax. While we are evaluating that advantages of direct tax, at that point of time, my dear friends, that are following are the advantages of the direct taxes. First is the direct tax system helps to create general consequences in the society. Then it's revenue elasticity also. Then it's a most logical and rational revenue mobilization method in evaluating the tax. Then it reduces the inequality between the rich and poor. There is an equality. That you earn something, then you have to pay according to your earnings or income. Then the more realistic estimation or estimates can be possible. That means while you analysis your income statement, while you analysis your balance sheet, while you evaluate it and you pay the tax, at that point of time the government has the different type of analysis and that evaluate that what are the profit terms and what are the future profits came up with that particular possibility over there. So these are the advantages of direct tax. Next is disadvantages of direct tax. My dear friends, following are the disadvantages of direct taxes. The difficult and time consuming tax collection process. Yes, in direct tax there is a difficult as well as very time consuming process for the collection of the tax. And when there is some uncertain event occurs in the entire country, at that point of time that collection of taxes delayed by certain time. Second is cost of collection is exorbitantly high. That means it's a very high. Then pinch the taxpayer more. It generally pinched at a particular point of time. Then many people find it difficult to understand. For that, the new web portal of Income Tax of India launched by the Income Tax Department, and it's easy to understand every people and easy to access it. It lead to the tendency to avoid the work. Then evasion and corruption are also there in direct taxes. Then it arbitrarily decided. Then narrow based calculation of the tax. So my dear friend, these are the disadvantages of direct taxes. Now moving to the indirect tax, there is a second type of the taxation. In indirect tax, the taxes or indirect taxes are collected at the consumption stages and at the time of spending the incomes. As the indirect tax are mainly levied on the commodities, they are collected at the time of sale or purchase of commodity in the commercial activity of the business. My dear friends, the indirect taxes ultimately based on that particular commodity, and that's why on that basis whenever you purchase that particular commodity and whenever you sell that particular commodity, at that point of time they have to collect that tax from the people. The indirect taxes are collected at a various stages in the chain of manufacture from raw material to consumption of finished goods. The customs and the custom duty is levied at the time of import of the goods into the territory of the country. That means while we are done with that the custom duty at that point of time, whenever the imported goods are coming into your territory of the country, at that point of time custom duty levied on it. Then the excise duty is collected at the time of production of the finished product or finished goods, and it is levied on the person who manufactures of that finished product or finished goods. Then the value added tax was collected from the seller of the finished product when he sells that the product in the commercial market. The incidence of this taxes, the excise duty, the custom duty, the value added tax, and then the etc., all these duties were passed on by the manufacturer or seller to the ultimate consumer, and that commonly called as the customer, through the price charge for that particular commodity sold. Thus, my dear friends, incidence of indirect tax gets shifted to individual person in the society. That means the burden of tax is shifted one person to another person. Although they are not directly paid by him into the government treasury, but they indirectly paid it. So this is all about the indirect taxes. But my dear friends, on 1st July 2017, the Goods and Services Tax came into force and existence. After the commencement of that particular law called Goods and Services Tax under the Indirect Tax, the excise duty, the value added tax, the service tax, etc., all other indirect taxes are abolished, and there is only one tax, the one indirect tax imposed, that the Goods and Services Tax, whether you rendered any service or whether you sold any goods. And the another aspect of that, the indirect tax, that is an custom duty over there. Wherever the imported goods came into your particular territory of the country, at that point of time the custom duty imposed over there. So ultimately in indirect taxes, the mainly emphasizing on the goods and services tax and custom duty in today's era. Now moving forward to the advantages of indirect taxes and disadvantages of the indirect taxes. My dear friends, advantages of indirect taxes. The first advantage is, or first benefit is, that it convenience in collection and assessment. It easily conveniency and it easy to collect the taxes, and it make easy to complete the assessment also. Next is, my dear friends, it speech the taxpayer less, because the burden is shifted one person to another person. On that basis, my dear friends, the burden, when the burden are passed over the another person, at that point of time pinching is very less. Then indirect taxes are difficult to avoid. That means there is no scope to avoid it. Then the broad based calculation of tax. The indirect tax can be used to protect the health of the society. It's ultimately, sir, the progressive tax policy also there. Then indirect tax can serve as a complementary to the direct taxes. Then an effective means of mopping up the consumer surplus. So my dear friends, these are the advantages of indirect taxes. Now moving forward to the disadvantages of indirect taxes. The very first and basic disadvantage of indirect tax is that indirect tax do not create social conciseness, where the direct tax also they create that social conciseness. Then the indirect tax difficult to assess the effect of the incidence of taxes. It's very difficult while the assess that the incidence of tax were taken into the place. Then they are not levied according to the principle of ability to pay. It's not defined that ability to pay, but it's defined on whatever the manufacturing done by your business unit, then you have to pay the tax. When you are rendering service or goods to the another person, then you have to pay the tax. There is not principle that define your ability to pay tax. Whenever it required, whenever you render a service, whenever you sold the goods, at that point of time you have to pay the tax. Then it is uneconomically some point of time we can evaluate at that and uneconomically. But my dear friends, according to me, the indirect tax play a highest and it collect the highest tax as compared to the direct tax. Next, proved the inflationary also. That means it ultimately some affect the inflation also at some point of time. So these are the disadvantages of a indirect tax. So my dear friend, this is an important that the indirect tax is very important in a nature. Next, move to the distinction between the direct tax and indirect tax. Whenever, my dear friends, we talk about the direct tax and indirect tax, at that point of time and comparison can also be made up with it. While we are referring with the direct tax, the nature of tax is the tax on a person or an individual or an organization, and burden cannot be shifted in a direct tax. But the nature of tax of indirect tax is the tax on a commodity. Then in direct tax, who pay the tax? The person pay the tax. And in indirect tax, the dealer pay the tax. Some point of time, that is the manufacturer can also pay tax. So while you are rendering services or sold the goods, at that point of time that person pay the tax. And in indirect tax we can say that the direct person or where the individual or organization pay the tax. Next is the burden of tax. In direct tax, the burden of tax cannot be shifted to the another person. It's on the particular person. But in indirect tax, my dear friends, the burden can be shifted to the another person. Next is shifting the burden. That is cannot be shifting that burden, and in an indirect tax, ultimately it's shift the burden one person to another person. Then shifting of the burden or the burden of tax, the question of giving something in return of the tax collected does not arise. However, the tax proceeds are utilized for the public purpose. And in another way, while we are talking about that the indirect tax, it return collected does not covered. So ultimately it's also for the public, utilized for the public purpose. Then base of the assessment. The tax which is levied on the expenditure are called sometimes of it indirect taxes, that you are confirmed with the manufacturing, or you rendering a services, or you sold the goods. So on that basis, and in the tax is based on the income on the receipt or the receipt base, which is the base of that particular assessment over there. That means if you earn something, it is called as your income, or it is treated, or it is termed as your income. And as per the Income Tax Act 1961, there are the majorly 5 heads for the evaluate the income. The salary head, income from salary head, income from house property head, income from profit and gain from the business and profession, capital gain, then income from other sources, and these are the ultimate the base are the under the income tax. And these are the actually example of the direct tax, that is an income tax, wealth tax and gift tax. But my dear friend, the wealth tax and gift tax are abolished. So as of now, the income tax is covered under the direct tax. And in indirect tax, there are various law like a weight, excise duty, custom duty, service tax, etc., octroi, etc. But as of now, after the 1st July 2017, my dear friends, there is an goods and services tax over there and custom duties over there. Next is process of assessment. Then the process of the assessment on or the achievement. Then it take the price through the correction of ability to pay the tax and the actual to pay the tax. And in process to achievement the tax, that is a price to the commodity market or from the commodity of particular commodity. Pricing the lump sum, and we can say that the different rates over there. So there is an no the question mark over that the price of particular tax. So ultimately it's a pinches to the taxpayer, less he is the kept in the dark about how much he pay the tax over there. Then inflation direct tax are considered as the effective and important the total of the art of the inflationary fiscal policy. And the indirect taxes are the inflationary, as they are increasing the price of the commodity by the amount of the tax levied. That means they ultimately increase it in that particular manner. So my dear friends, it ultimate easily come up with that the direct and indirect tax are the major sources and a base pillar of that public revenue. So these are also the important in the public revenue and in the taxation system. While we are talking about the direct tax, my dear friends, so where the direct tax come up with it, and where the goods and services tax come up with it, and where the custom duties come up with it. So the tax system in India, that is levied by the 3 levels. That is, first, as I earlier told to you, that the Constitution of India defines in that the 3 list, that is list 1, list 2 and list 3. List 1 is a union list, list 2 is a state list, and list 3 is a concurrent list. On that basis, my dear friend, the tax in India are levied by the central government and state government, and some minor, basically it can be the easily complied with the local authority such as a municipality also. So tax are the levied by the central government. Then what are the taxes? And from the state government, then what are the taxes? And from the local bodies or local authorities, then what are that particular taxes over there? So ultimately, my dear friends, that define there are the 3 major taxes over there. There is a 3 concern with the tax system in India, that is central government, state government and local government. The local government can comprise with the octroi, that is a toll naga also, or entry tax also, the tax on the property, the tax on the market, and the usage charge of the utility, light and water supply and electricity and the drainage and etc. Then the state government can be the defined or collected the stamp duty also, then the land revenue matters also, then tax on the vehicle also, then the duty on entertainment and the tax on the luxuries also, then goods and services of uh, services tax, yeah, GST for the state GST, that is not a central. Ultimately GST has the four type, that is a central goods and services tax, state goods and services tax, and union territory services tax, and the integrated services goods and services tax. So ultimately the state government imposing and collecting the state goods and services tax over there. And while we are talking about the collection by the central government, then the central government also the comprise with that central goods and services tax also. Then security transaction tax for the STT, in short form that is an STT. Then all the residential type of that particular taxes are be listed by the any authorities with that. And a tax on the income other than agriculture income, that is an income tax under the 5 head where I told about it, that is a 5 head, that is salary, house property, capital gain, profit and gain from business and profession, and income from other sources. So these all are the, as well as custom duty, these all are the collected by the central government. So this is what all about the tax system in India. In this block, my dear friends, we studied that the development of economic fund as required in the country or in the taxation system plays a major role. While we are talking about the economic policy, at that point of time there are the two main sources of that economic policy, that is public revenue and public expenditure over there. And in the public revenue, the direct tax, indirect tax, and the government commercial undertakings are the play an important role for collection of that public revenue. So for that the tax system is very important in a country. So this is what we are talked about, that direct tax and indirect tax, that means get different types of tax system. Then tax system in India, what is tax according to different experts, then characteristics of taxation, etc. For that, my dear friends, you have to come with the long questions also. Write the detailed note on the types of taxation, then distinguish the direct tax and indirect tax. The types of tax, basically there are two types, that is an direct tax and indirect tax. Under the direct tax, that is income tax, and in the indirect tax, goods and services tax and the custom duty. Then you determine the difference between the direct tax and indirect tax. In the short question, my dear friends, give the any two advantage and disadvantage of the direct tax and as well as the indirect tax. Then, my dear friends, while we are talked about the multiple choice question, there are two major multiple choice question. The first is which tax, that is a dash tax, is the tax paid by the person on whom it is imposed, and burden of this tax cannot be shifted by the taxpayer to the another person. The burden cannot be shifted, then my dear friends, it's a direct tax. While we are shifting the burden one person to another person, then it is treated as a indirect tax. Then second question is, my dear friends, that the following are the demerits of indirect tax. That means you have to learn, you have to evaluate that all advantage and disadvantage of the indirect tax and direct tax. So first we are talked about that indirect taxes. Then which are the demerits? The first is indirect tax do not create a social consequences, absolutely right. Then difficult to the access the effect of the incidence of tax, and this is also right, and it's a uneconomical, then absolutely right. So answer is D, all of the above. So my dear friends, this is all about the today's session. Thank you very much, my dear friends. Have a great study.